We're moving on now. It's a bloody Wednesday. Other markets in the U.S. The stock futures point to a decline at the open following worries about escalating U.S.-North Korea tensions. This came hours after President Donald Trump warned of a fire and fury response to North Korea if it threatened the U.S. The S&P 500 index futures fell 0.33%, while the Dow Jones Industrial Average futures eased 0.11%. The Nasdaq futures slid 0.52%. Data from China's National Bureau of Statistics today shows that the country's consumer price index rose 1.4% year-on-year in July. The growth rate was slightly down from June's 1.5%. On a month-on-month basis, the index was up 0.1%. The NBS attributes the decline in CPI growth rate to lower food prices. However, high temperatures and heavy rainfalls drove up vegetable and egg prices. Meanwhile, airfares and travel agency charges also increased in July because of the increasing number of tourists during the summer vacation. The two items contributed to 0.13% of the increase in CPI. The South African rand fell for a second day against the dollar after President Jacob Zuma survived a no-confidence vote that aimed at bringing an end to his administration. Now the second worst performing currency among major pairs, analysts maintain the 198 versus 177 vote result is unlikely to be a trigger for excessive currency weakness. The rand declined 0.4% to $13.42 per dollar after sliding 1.1% on Tuesday. The rand's one-month implied volatility, a gauge of expected swings at the currency, now stands above 15%, and that's the highest among the global major exchange rates. South Africa slipped into recession this year under President Zuma and has seen unemployment figure rise to a 14-year high. And we're staying with market performance, but this time taking a closer look at financial activities in Kenya. A day after a peaceful presidential election, the Kenyan shilling strengthened against the dollar as early results showed President Uhuru Kenyatta in the lead. At lunchtime in Nairobi, however, the Kenyan shilling has reversed earlier gains to 103.96 on the dollar, and the yield on Kenya's $2 billion Eurobond due year 2024 down 12 basis points to 6.36%, and that's according to a Bloomberg report. Well, Kenyan journalist Teddy Otieno joins us live from the capital. Okay, we don't have Teddy yet, but we hope to speak with Teddy as the program goes on. In the meantime, the International Monetary Fund is projecting an annual real GDP growth of 5% for Botswana, supported by a gradual rebound in the global diamond market and public investment. The Global Finance Institution, which just concluded its Article 4 consultation to the country, says prudent financial policies are expected to maintain inflation within the 3 to 6% objective range set by the Bank of Botswana. The IMF notes that the fiscal stance articulated in the 2017-2018 budget and the medium-term expenditure framework entail small deficits over the next 2 fiscal years and a rebalancing of expenditure composition towards development spending. The government is advised to proceed with plans to set up the macroprudential policy function and strengthen risk-based supervision of non-bank financial institutions. A senior U.S. State Department official, Mr. Peter Baclarin, has informed African countries that the Africa Growth and Opportunity Act trade deal will not stretch out to infinity. The statement comes as top U.S. officials arrived in Togo for a meeting to review AGOA, a free trade pact set up for the African continent during President Bill Clinton's regime. There were hints that the Trump administration could move into some other type of arrangement that may include bilateral or larger free trade agreements. AGOA, which is due to expire in 2025, has seen U.S. exports to Africa jump to $21.81 billion in 2015, while Africa's exports to the United States was a mere $9.4 billion last year. And gold futures are up today, joining a rally in safety plays that was sparked by a new war of words between the U.S. and North Korea. Gold for December delivery rose 0.9% to $1,274.30 an ounce. On Tuesday, gold settled 0.2% lower, hit by a dollar rally that came after an upbeat release on the American job market. The metal is up 0.8% for the week, stretching its year-to-date gain to about 11%. Business Incorporated returns in a moment. Please stay with us.